Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfield, and normally we talk about 3 important things for the upcoming trading week. I think I've got like 8 of them for you. So let's kick things off with the earnings calendar. It's a very light but special earnings week. Why? Well, as you can see here, we have 51 companies reporting earnings, so no big deal. We start things off on Tuesday. That's right, nothing on Monday, but Tuesday you've got McCormick & Company. Wednesday you've got Acuity Brands, Tilray, and on Thursday, rounding it out for the week, Constellation Brands, Rite Aid, Lamb Weston, ConAgra Brands, and Levi's, and that is it. So why was I putting all the emphasis on this special week? Well, because this week is kind of the last week of earnings before we get earnings season kickoff, which will happen in the next week, and that's the really exciting part. So no big news here on the earnings front, some names that might be in your portfolio, but let's move on. We got that one piece out of the way. I've got 7 left to get to. Now let's talk about central banks. Of course, all eyes on the U.S. central bank and interest rates and inflation. However, there are a lot of eyes pointed at other banks around the world. Now, when we talk about central banks, typically we're looking at what are they going to do with regards to their rates? What's their interest rate policy? And many of them are following just what the U.S. do. Well, a couple weeks ago, we had 2 central banks that were supposed to raise, and they did not because the U.S. didn't raise either. And therefore, we might see some changes here with central bank policy and stance going forward. That said, let's take a peek at what's happening this week. On Monday at 11:30 p.m. Eastern Time, we have the Reserve Bank of Australia reporting earnings. They are expected to keep rates exactly where they're at 4.1%, so no real surprises there, at least not yet. And coming up a little bit later on in the week, literally the next day, the Reserve Bank of New Zealand will be making their rate announcement on Tuesday at 9 p.m. Eastern Time, and that is expected to stay the same as well at 5.5%. So, barring any shocks to the system, we should see rates hold right where they're at for these central banks. But remember, we have seen some surprises recently, so if you are trading the Australian dollar or you are trading the New Zealand dollar, prepare yourselves, maybe go a little bit lighter on your positions or go flat at that time because you might see a lot of volatility transpire. All right, so that is what? 1, 2, 3 pieces of information out of the way. I've got a few left for you. So let's dive into our next topic, which is going to be U.S. employment data, talking about jobs. And there's quite a bit to talk about. I have 4 pieces of information here just on the jobs data alone. So let's start things off on Tuesday at 10 a.m. with the JOLTS job openings, a pretty minor one. The next one's a biggie. You have ADP non-farm employment change on Wednesday at 8:15 a.m. Eastern Time. Again, that's going to be before the market opens, so that will be priced in by the time that opening bell rings. Then the normal one, unemployment claims, Thursday at 8:30 a.m. And the big daddy on Friday, unemployment rate, Friday at 8:30 a.m. Eastern Time. Now, why is this one so important? Because we've been hearing so much about the unemployment rate rising. We heard from Jerome Powell back at the Jackson Hole Symposium a year and a half ago saying, expect some pain. We expect to see some pain in the unemployment market, meaning unemployment rising. Well, I've been saying this for a while. Back in 2009, 10, 11, 12, 13, when we were at really high levels of unemployment, we had our central bankers saying, well, our target is 5.5%, and that's called full employment. Well, we were sitting recently at a much lower level than that. So let's take a peek at the charts here so you can kind of put it in the context of where we are at. Here is your unemployment rate history going all the way back into 2018. Of course, you see the giant spike there in 2020 when COVID hit and we all were sheltered in place. But it's been dropping aggressively and it looks pretty decent right now. However, it looks a little bit different if we zoom in just a hair here to see the most recent data. Now, this goes back about a year and a half now, and you can see that we have been trending up. We were at lows right around 3.3 to 3.4%, which is incredibly low on a historical perspective, but we have been rising, and you see the most recent number at 3.8. What I find interesting about this one is the previous number was 3.8% unemployment, and the forecast coming up for Friday are going to be 3.7. They're actually expecting it to drop down just a little bit. Seems to me that if that ball is now rolling and unemployment is starting to increase a little bit more, we might actually exceed that number. But right now the expectation is 3.7%. Now, of course, looming over all of this, and I've given you 7 points already, right? So we've got 7 out of the way. I've got 1 left. Looming over all of this is our government shutdown, which as of the recording of this, we have not had a definitive resolution. They're going to do this or this party won't do that. Oh, who cares? It's all posturing. It's all grandstanding political showmanship on their part. Bottom line is, since we recorded this, there has not been a definitive announcement. Now, What this means is market uncertainty going forward. If over the weekend, right, let's say going into Sunday night, they make a resolution and they come to some agreement, fine, the markets will probably be happy with that because the uncertainty is removed. If we do go into a full government shutdown, expect increased volatility in just about every asset class on every single day because we just don't know where markets are going to go. And as you know, the markets hate uncertainty. They like when a politician or a central banker says, we're going to do this on this date and go to here. They want that kind of direction. Right now, if there's a potential government shutdown, not only do we not have potential direction, but we just have no clue about which way markets and economies are going to go. So that, my friends, is your 8th piece of information for your Monday morning must-knows. Be careful out there, and we will see you next week.